the trade wars, that are being fought right now, between the US and other countries. And in one of the recent talks, the federal chairman, US Federal Reserve chairman, told that it is not an issue. It is the inflation will be only transitory. That's why we might be reducing interest rates, something like that. So, how important or how riskier these tariff wars are for India and others, of course?
No, I think we have not seen the end of the tariff readjustments. I think it's only the beginning where we have seen certain statements. Certain statements have been made, certain statements have been pulled back, revised, and all sorts of things are happening. I think it's too much of change that we are seeing at this point of time. Really difficult to predict which way things would head and ultimate impact. However, one thing is certain that as far as US trade relations are concerned, larger larger imports are coming from China, Canada, Mexico, and European region, right? So their immediate focus is going to be to see what can they do on these 3-4 regions rather than India in particular, and that's what even in the run-up to actual changes in tariffs, etc., their focus seems to be on these 3-4 nations. And also, as far as India is concerned, while we do have a reasonable exports to US, most of it is coming through services part, not manufactured goods. And tariffs can be imposed on manufactured goods, but not on services like IT services, etc. They could have a different way of making it expensive or making it difficult by having visa restrictions or increasing the cost of doing that business, or asking them to recruit people from American population, etc. So which could increase the cost for doing business, but it cannot really impede the overall business as much as it would do in case of a really high tariff. So yes, there is going to be volatility because these changes are unpredictable at this point of time, and a lot of things are very fluid. And markets generally doesn't do well whenever there is unpredictability and volatility in the external environment. Markets like predictability, and at this point of time, predictability is quite low. And also on top of that, the valuations have been higher for some segments in the market as far as India is concerned. So that also of more readjustments in terms of valuations. But by and large, I think India will be not as much impacted as other nations. But until we find out what is the exact impact, markets could remain nervous in terms of likely adverse impact, etc.
And coming to the domestic economy, what are the sectors that are attractive right now for investment?
I think clearly, as market valuations have been higher for a long period of time and have only corrected in the past few weeks, it's difficult to really get large sectoral plays where the valuations have been very comfortable or very attractive. One sub-segment of a large sector, which is banking sector, within the banking and financial services sector, is somewhat comfortable in terms of valuations. And this is also one sector which has not performed in line with the market because of the regulatory headwinds, because of the slower growth, etc. Now some of those negatives are also turning around, and we believe that there is a reasonable valuation comfort when you look at banking within the overall market. Apart from that, there are many sectors where valuations have corrected quite nicely over the last few months. However, from here on, I think in the early part of the recovery, I don't think entire sectors participating uniformly. Usually that happens in a bull run, in a market where people believe that every equally well or similarly well, the valuation go to higher levels. But in this kind of a market, I would say that one needs to be more stock specific. Even within the sector, the performance could be quite divergent. For example, in automobile sector, two companies could be very different depending on how their volume growth is, how their profitability growth is over the next couple of years. But in a bull run, what happens is essentially the companies which are doing well will anyways get higher valuation. And people also expect some of the companies not doing so well to reach those levels over the next few years. The valuations were high, and we cannot continue giving those kind of valuation. With that backdrop, I would say that we may not see a sectoral moves as uniformly as what we have seen in, let's say, 2023, 22, etc. In this phase of the market. Maybe 6 months down the line, 12 months down the line, when things become better, maybe you will again get into that kind of a phase. But at least for now, I think it is better to focus on a bottom-up stock basis.
Okay.